Hey, what's up, beautiful people? How y'all doing? So, I thought I would do a little bit of a breakdown for you guys. I know it's been a little while since I've done just a regular price breakdown like this. So, it's going to be on Euro USD. I thought this would make a really good lesson. Um, and I'm not just cherry picking, and I thought it would make a good lesson because, well, the first setup that we had on Euro USD this morning was super clean. It was super, just a really great setup in London session, or there was really good fall through off its levels. But then New York session was just it was tricky. It was very tricky, and I want to go over that, right? Because I know in the world of social media, in the world of even YouTube, everybody likes to talk about the best trades. They like to talk about everything that went that just banger setups. They like to only talk about the ones that are excellent. All right. And I want to, take a little bit of a different direction with this. And I want to talk about something that didn't quite work out. And again, I got this incorrect. In London session, I was right on it. But in New York or London session, I was right on it. But New York session, I did read it wrong. And I have no shame in admitting that. Okay. A lot of people do. They can't get themselves to say I was incorrect. All right. I read it wrong because of their ego, which is the same reason why they don't make money. Right. But I have no problem saying that because that's not what trading is about. It's about execution, right? So let's pull it up. And I'm going to refer first I'm going to refer back to my free Discord chat where I first posted this. And if you ain't in my free Discord chat yet, I don't know what the hell you're doing. Like, why are you not in there? All right. Are you insane? Are you crazy? Why are you not in there? It's 100% free. And the link is in the video description. I post my watch list in here every single morning. All right. And I got tons of educational material. There's tons of other traders in here that you can connect with as well. So I don't know why the fuck you're not in there. It's an amazing chat, right? And we want you aboard. We want you to be a part of the team. We want you to share your ideas with us. We want to connect with you, right? It's good to have that community around you, that helpful community. Okay. So we're going to pull this up though. And because it's going to set the framework from this, for this lesson. So this is the very first thing that I posted in chat this morning. I said, overall, I'm bearish on Euro USD right now. It will want to take out previous week's highs soon. But first, I'd say it pulls the rug and moves lower. It's taking higher time frame buy side liquidity at the moment. Look right here, where this little microscope thing's moving. See that? Taking higher time frame buy side liquidity at the moment, rebalancing another portion of that fair value gap, and it's testing a bearish order block, all while operating within a bearish market structure on the 4-hour chart. So look at everything I just told you in here, guys. Look at all these signatures in here. It's bearish market structure. This Euro USD is bearish market structure this morning in London session. You're taking out higher time frame buy side liquidity. What is that? Look right here. Look at that. Oops, I thought I was going to zoom in. Look right here. We have a swing high level. Highest high in the middle, lower high on the right, lower high on the left. That makes that a swing high on the 4-hour chart, which means above that level is what? Buy side liquidity. Higher time frame buy side liquidity. And this morning, in London session, we came up and we took that liquidity. Boom, it's gone. It's out of the marketplace. Boom, swept it, right? Those buy stops are taken. And we tested a bearish order block right here. This is what I mean, guys. And I say stacked on stacked resistance in here. But then I posted a 1-hour chart where I indicated that it's going to ramp up first and test its 0 institutional price level. Now you're like, whoa, hold up. You just said it's bearish. Now you're saying it's bullish. Why are you flip-flopping, right? So I'm going to break this down on the chart now. And we're going to unpack this because it makes for like a really good lesson. Let's go to the 4-hour chart. So this morning, we had a few levels noted, right? This right here is your higher time frame buy stops. Look at this right there where my cursor's moving. And right here is your higher time frame bearish order block. And you're operating within a bearish market structure. Now, first things first, I want you to get inside the head of a short seller. Let me go replay mode real quick. I want you to get inside the head of a short seller. Somebody who's already in this play. They're looking for lower prices. They get short on this move up into this range right here. It comes up into this fair value gap right here. See this? They see this O low in here. They see this resistance, right? And they're thinking, and now what they're seeing is they're seeing this thing move lower here. Look at this. It just put in a swing high level. It's starting to top out right here. It's about to take out this low right here. What do you? They're in it. I mean, hook, line, and sinker. They're in it. They're looking for the low, right? Where are they going to keep their stop at? I mean, use common sense here. Because most traders, we don't do things that differently in regards to keeping your stop and your profit target, etc. Where are they going to keep their stop at? Where do traders keep their stops? Above resistance. Where's resistance? Where's the next level of resistance? Right here. What makes that resistance? What is resistance? Resistance is an area on a chart where prices failed to move higher in the past. So buy sell liquidity right here. Okay. That's what, resistance teaches you. It's an area where prices failed to move higher in the past. This is where the absolute high that price hit before it had this decline lower and looked like it was going to take out the lows right here. So shorts are banking that this is going to hold up this resistance and it's going to move lower and take this low. So they're placing, we have a huge bucket of buy stops that are right above this level right here. And here's the thing. This is in place coming into London session this morning. Why is that important, Mike? Well, because that's prime time for your manipulation swing. It's all about timing here, right? So we're having this move higher while operating within a bearish market structure. And you're having this move higher in London that takes out those existing shorts. It takes them out. Boom, they're gone. They're done with. All right. And at the same time, it's baiting in longs. Look at this. This is in London session. London is prime time for the Judas swing to occur. The beginning of London session is typically where you'll get your Judas swing. A Judas swing is a fake run in the opposing direction where price really intends on going for the sole intention of taking liquidity and also baiting in market participants on the wrong side. It takes these buy stops right here. It kills those shorts. It rebalances this price action and it tests a bearish order block. Think about that. Think about all of that, what I just told you. You rebalance this entire imbalance right here, all of it entirely. And you're taking out higher time frame buy stops, bearish market structure, and you're testing a bearish order block right here. Look at this. Look at that bearish order block right there. The last bullish candle before we had this displacement lower right here. And you're doing all this in London session. Go to the lower time frame real quick. Look at this thing. It's pushing up. This is where we open up. This is where we come into a new day. This is where we enter London session. What does it do immediately? It pushes up. It pushes up immediately, and then it pulls back right here. Now, if you recall, what did I just say in the Forex analysis section? I was actually short-term bullish first. And this is where I'm sure it might trip some of you up because you're like, but you just said the higher time frame resistance. You just said the higher time frame liquidity. You just said all this stuff. Why in the heck would you be bullish on this thing? That makes no sense. Look right here. And look up above. Notice on this first push right here that you saw in London session, see how it just barely missed that 0.0 institutional price level? And for those of you that don't know what institutional price levels, I'm going to leave a link in the video description to my video on ICT institutional price levels. They're magic. They're fucking magic, right? If you combine it with liquidity market structure, your precision will go to another level if you implement institutional price levels. It cleans up stuff just so much. And then, don't take my word for it. Just go look for yourself and you'll see what I'm talking about. They're amazing levels. So that's why I was anticipating that this wasn't done yet right here, because we had this institutional price level right up above. We had this bullish imbalance right here, which is a level of support. And then look right here into London kill zone. It comes down and it completely rebalances that 1 hour price action while still not moving up into the 0.0 institutional price level. And we understand that major market reversals tend to occur around institutional price levels. So that was like the last little thing I needed to see it hit. And then I was anticipating that this thing was going to fold, that it was going to move lower. And it ended up ramping up right here and giving that push up into that institutional price level. So you could have scalped that. You could have scalped that right there. Again, posted in the chat before the fact. No hindsight, like 99% of the people in this business, right? They'll come after the fact and then they'll talk about, oh, look how much money I made, right? And how they just completely nailed it with all their little fancy concepts, right? But they won't post it beforehand. So that's what we saw. We came down, we rebalanced that, boom, it takes the high, clean. It comes up, hits that level. What happens next? This thing just gets demolished. It gets absolutely destroyed. No surprise, because it's testing that. It took out higher time for liquidity. We tested a higher time for bearish order block. It's just stacked on stacked on stacked resistance. So of course, it's no surprise it had a reaction. What is that? What is this right here? That is confirmed shift in market structure. That's multi-time frame alignment with the 4 hour, the 1 hour, and now we have this shift right here. Look at that. We have a confirmed shift in market structure here. We have old low resistance in here. Okay. And we have previous week's lows down here still that hasn't been tapped into. Higher time frame liquidity right here. Boom, there's your draw. So as I said, this is the part where I got wrong this morning, and we're going to unpack it, and I'm going to kind of tell you my thought process on it. As I was telling my mentees this morning, if it moves up into a premium, that's something that's a confirmed short setup. That is A plus setup right here in regards to just market structure and liquidity. That's A plus right there. That's a really nice setup. Now, actually, let me see. I think the 80 is the 80 level. I don't know if the 80 level is in a premium. That's 1 minus for it. Maybe A setup, right? Let's put it down to about an A setup, not an A plus. But that's still amazing. Like, that's still a great setup. It has so many things here, and this is one of those setups where, as I was saying earlier, like, you have to struggle to find something wrong with it. You have to struggle to find something wrong with the play. It's just, it looks fantastic. It has everything you want on the play. And as I was saying, it moves up into a premium. You could look for a short on this, risk the high, and then you could look for it to take this low. You could look for it to take this low down here. So guess what happens? It moves up into a premium. It moves up into optimal trade entry. And then what happens next? It takes the high. It gets invalidated. It didn't play out. So what do we do now? Well, sure, review the trade, see if there's anything you could have done differently. But here's the deal on a trade like this. This is a nice setup. There's not a lot that you could do differently on this. I know all the hindsight chartists will come in later and say, "Oh, I knew this was going to happen. I knew it was going to ramp up." After it moves, of course, right? But here's the deal. That's a solid short setup. And I'm telling you right now, you take something like this over the course of 50 to 100 trades, you're coming out on top. And that's the message. That's the key message I want to leave with this video today, because I know a lot of you. I posted a chart on Twitter. And again, if you're not following me on Twitter, what the fuck are you doing, right? But I posted a chart on Twitter, and I had a lot of you in the comments saying, "Yep, this got me too. This got me too. This got me too." And that's actually what inspired me to make this video today, because I want to give you this message. That's fine. And you have my cosign on it. That was a solid setup. That was an absolutely solid setup. And if you were to take something, if you were able to be patient for something like this consistently, you're going to get paid long term. I don't give a fuck what nobody tells you. You're going to get paid long term. Okay? That's a solid setup. And what a lot of people do after they get tagged out on something like this, and this is a key thing here that's going to determine your longevity. What a lot of people will do once they see something like this, like when I mean something like this, I mean whenever you have something that's like basically an A plus setup that looks perfect, right? It has everything you want. It just jumps off the chart at you. I consider that something that's jumping off the chart at me. Like, there's no thinking that really goes into it. I saw it. I liked it. Boom. And when you see something like this, and then it's incorrect, there's a thought process that goes into a lot of traders' head at this point. You know what they start to do? Well, if you're a perfectionist, which, many of you are, and I am myself, I had to overcome that. Okay. It's difficult, I know, but you got to. You'll drive yourself crazy looking at this thing. You'll drive yourself crazy. You'll just go insane trying to find what you did wrong. And guess what? Sometimes you didn't do anything wrong. Sometimes the market's just shit. Let's put it, it's as simple as that. We don't got to get into all the details about why the market is shit. It's just shit, right? Let's keep it like that. That's as simple as it can get. And if you can accept that sometimes that's going to happen, you're gonna feel a big weight lifted off your shoulders, right? You don't need to be right all the time. Okay, sometimes you're just wrong. You could have done everything right. It can be an A plus set of everything right, and you can be incorrect on the play. And that's what goes back to our psychology lesson: is the short term is random. The trade in front of you is fucking random. Get that through your head. But guess what? The next 50 to 100, they ain't random. The next 50 to 100, that's where your edge is displayed. And I'm telling you, take this. Over the next 50 to 100 trades, you're up handsomely. That's what matters. That long-term perspective is what matters. So don't let the short-term results get to you. The key is to keep executing. The key is to stay level-headed, right? And don't let scenarios like this where you have a good setup that's invalidated, make you rethink your entire thought process. That's trading, guys. Taking losses is a part of this game. You gotta be able to take it on the chin. That's why I have no issue make an entire video on this saying, I got this wrong in New York. I read this wrong. I thought this was going to go lower right here and take out this low right here. I have no issue saying that because that's trading. And everybody has that issue. I don't care who you are. Everybody gets it wrong. Everybody analyzes it wrong. Anybody who says they don't, well, they're a liar. And they're full of shit. It's okay. You can be wrong. Have that long-term perspective. Keep executing. And if you can do that and win in those high-quality setups and have that long-term perspective of 50 to 100 trades, you're golden. You're set. Have that perspective.